There is more blood to come. Please do not let this bear market rally fool you into thinking that we're back in a bull market. In this video, I'm going to show you why I still think we're in a bear market. We're going to go over a macro perspective, stocks, as well as crypto. I'm going to show you why I actually doubled down on my short and how I'm shorting in a low risk, high reward way while getting paid to do so and minimize my risk of liquidation. Finally, I'm going to give you an update on our yield farms. And before I start this video, I want you to know that this is not financial advice. Please consult with your financial advisor before making any investment decisions. And this video is for your education purposes only. So let's get right into it. So let's start with the S&P. And keep in mind, we have midterm elections coming up. So in order for the powers to be to stay in power, they want happiness in the market. They want to see the markets pump. So in my opinion, this is just manipulation / a bear market rally. So as you can see, we've had this chart on here for the past few months, pretty much all year. Since January, and you know what's happened every time we get to the bottom of the channel, we go to the top, and it looks like that same thing's happening again. And I've been telling you guys for months that once we start to get in here or in lower, this is our heavy accumulation zone, because this is going to be lower than pre-COVID levels when they started turning on the money printers down here. So the Federal Reserve still has to flush all of this money out the system. So this the S&P. I think we're pumping into the November midterms before we drop down into this box. Let's take a look at the Dow, which is the top 30 companies. Look like we're about to test off of our 200-day and our 62 to drop again, just like we did here and just like we did here. Let's take a look at the NASDAQ. Same thing here. NASDAQ's not doing as well because we have the FANG stops, which we're going to go over here next. It's pretty much bleeding out. FANG stands for Facebook, Apple, Amazon, Netflix, and Google, which is now Alphabet. So if we look at Meta, scary sight for Meta. We have them down, I think 30% this week. So if we go from top to bottom, yeah, 28%, roughly 30%. Now, this is scary because we have all of the companies that pretty much make up most of the entire market, you know, the FANG stocks, and they're starting to bleed out, which signals that this secular bull market has come to an end. Secular just means that we're in a bull market, but we have large dips, and that's when dollar cost averaging becomes a good strategy. But now, had you been dollar cost averaging on these dips, you know, it's constantly going lower and lower. And hey, if you're really patient and you have income from other places and you don't have to worry about money, that's a fine strategy. But, you know, for most people, that is not the case. And, you know, Meta, they let go of Sheryl Sandberg, which is like one of the best operations managers in all of business, supposedly. And they made the pivot to focus on the metaverse. They're losing a lot of market share to TikTok. So they're kind of struggling right now, and it's shown in their stock price. Decline in stock isn't always an indicator of the business, but sometimes it is. Like Warren Buffett likes to say, in the short term, the market is a voting machine. In the long term, it's a weighing machine, signaling that eventually results will win out. But, you know, news and different events can determine the price of a stock for a short term. And that's why the S&P has been in a bear market 78% of the time versus, you know, 40 or so percent of the time been in a bull market. Let's look at Amazon. Same thing here. And this is another thing to keep in mind. Like, there isn't any stimulus checks going out. Interest rates are going up. So when people had all this funny money during COVID, Alphabet, which is Google, same thing, just dropping like a rock. And now let's look at Apple. Now, you may be thinking, well, Apple's doing, you know, pretty good. Yeah, they are. Apple's one of the most valuable companies in history and in the world right now. However, it is helpful to remember that they are going through one of the biggest stock buybacks in history. Okay. And unemployment is affecting their customers too. People aren't going to be buying as many phones. That's going to start showing. So if their revenues start declining and they don't have as much money to continue buying back their stock, it's going to spook investors. And they're going to start making their way down too. And it looks like if they don't get back up to here, and this is still trending downward, and we see the 200-day and the 62 just going down. And if we look at this, Apple has been on a bull rally since 2018. So since 2018, it's been on a bull rally, and it looks like it's starting to chop, come back down. And we see that in our 62 and our 200-day. Not to mention, this is forming a bearish flag pattern. So now let's take a look at Netflix. Same thing here. Netflix has just been dropping like a rock, and it looks like pumping for midterms. It looks like we're going to come here and start dropping down. Not to mention, Netflix is it's like things are going back to cable. Like the whole revolutionary premise for streaming services such as Netflix and Hulu was preview free, no ads. But now we're seeing a pickup on ad and a decrease in innovation. It's kind of going back to the old model. Like these companies are tightening. So let's look at some other data here. Now we have the next Federal Open Markets Committee meeting happening in November, where the Federal Reserve is probably going to raise interest rate. Well, they're going to raise interest rates, but between 75 to 100 basis points. I hope they just do 100. Yeah, I just think they just need to get it over with. But, I'm not looking at everything they're looking at. So I'm an outsider looking in. However, one thing that I can tell you that they will never say is they want employment to go down. Why is that? Because if they're constantly raising interest rates, it's sucking money out of the system because it's making the debt that these corporations have been living off of, taking so many loans out because the cost of money has been cheap. Well, now that the price of their loans is going up, they're having to sell assets to pay it off and lay off employees. So the sign of unemployment going down is a sign of inflation cooling down because it's showing that the funding money is leaving the system and these companies don't have as much to pay their workers, etc. So we can see that unemployment is kind of stagnant, but they want to see unemployment go up. They're not going to say that, but that's what they want to see. So we have unemployment rate at 3.5, total unemployed at 5.8 million. But if we look at the stats for September, we can see that unemployment is decreasing. So that's not a good sign. So it shows that they're going to have to be more aggressive when it comes to managing inflation. Now, let's look at crypto. So if we look at Bitcoin, I want to show you an interesting chart here. So we have this pattern forming here, and it looks like exactly like 2018, right? So we saw the 2018 bottom, which they call crypto winter, at around $3,000, right? Well, we saw this pattern form where resistance was constantly dropping while support was, in a straight line. And then we saw a 43% drop from this red line to the bottom. And then that's when the bottom was in. Like we saw the initial big drop and we were trending downward. And then we had the big drop after it tested our 62 and our 200 day as resistance. Now we have that same thing planning out again here. We had the big drop down, right? And now we're in this same pattern. Look at it. Same pattern. Decrease in resistance, straight support, decrease in resistance, straight support. And we have the market pumping for midterms. And it looks like we're about to drop. It's crazy that the S&P is pumping, but the FANG stocks are not. We're pumping to the top of this channel for a touch. And then I'm willing to bet that when midterms happen, we're going to drop. I don't think it's going to be another 40% drop from the red line, but let's say we do half of that, because I've been calling for a 14K Bitcoin. Half of that would be around 14.8, right? So I'm still shorting Bitcoin. I didn't double down on my Bitcoin short, but I did double down on my Ethereum short. And I'll show you why. This chart just looks a lot cleaner. Look at this downtrend. We've been testing the top of this channel, dropping to the bottom, top, bottom, top. This is where I put in the first short here at around 19 and then wrote it down here. Now it looks like we're about to touch our 62, or not so much our 62, our 200 day. And I think we'll drop, if you notice, every time we hit a top, we drop even lower. So we hit this top and we drop way down here. We hit this top, we dropped here. And now I think we're going to hit this top and go down to 700. And I think that'll most likely be the bottom. We'll probably have a flash crash or something like that. But during a bull market, you want to buy the dips and sell the tips. But during bear markets, you want to buy the tips and sell the dips. What does that mean? Shorting, in order to short something, you have to buy something or buy it or borrow it, depending on how you do it. I'm doing decentralized shorting because crypto hedge funds aren't legally allowed to short. So if we look here, I'm on radiantcapital, omni-chain money market. I did 2 videos on Radiant. One while I'm shorting a couple months ago, and one is like a deep dive. I'll attach them both in the description. But as you can see, I borrowed $59K, deposited $97,000 in collateral, right? So I borrowed $10K in Bitcoin. And given that USDC is my collateral, as long as the value of my collateral doesn't drop, then I don't get liquidated, right? So everyone who's borrowing using Bitcoin and Ethereum as their collateral, if Bitcoin and Ethereum drops, you can get liquidated and lose your deposit, and you'll just get to keep the borrowing. So you'll pretty much lose money. But with this one, not only am I getting paid to borrow, but I'm minimizing my risk of liquidation, pretty much eliminating it, because USDC isn't going to fluctuate. If anything, during a bear market, it's going to increase because the demand for stablecoins increases, which causes the price of it to go up. So the price of my collateral will actually go up, and it has been doing that. And if you look here, I borrowed $48,000 in Ethereum, and I have my chart here. I borrowed Bitcoin. I borrowed Bitcoin at $24,010 and shorted it. Well, sold it, bought more USDC, deposited as collateral, and did that same thing, looped it like 5 times, and I just did it again yesterday when Ethereum was at $19,110. Did the same thing, sold it as USDC, and it's already down to 15, so I'm already in the green on my short, right? And as you can see here, I'm getting charged at 8.45% interest rate to borrow Ethereum, as well as an 8.18% interest rate to borrow Bitcoin. But I'm getting paid 17.52% in Radiant tokens while getting paid 14.25% in Ethereum, or in Radiant tokens for borrowing Ethereum as well. So I'm getting paid 6% here and 9% here, as well as all of this that I have here, because you get paid from this platform in Bitcoin, USDC, Tether, DAI, and Ethereum. And as you can see here, I'm getting paid in Radiant and ETH, Radiant and DAI, Radiant and USDC, Radiant and Tether, Radiant and Bitcoin for supplying it as collateral. So I'm getting paid to supply it as collateral and to borrow. And I'm bullish on the Radiant token, so I'm taking it and I'm staking it. Didn't mean to rhyme. But when you stake the Radiant token, as you can see, I have around 12K here. You're getting 129% APR paid out in these assets. So I already claimed these before the video. But given that it's so high and I have so much here, I already made $19 in a few hours, right? As well as the money from vesting here. So I'm literally getting paid to short while preventing my risk of liquidation. And this project's market cap is extremely, extremely low. It's definitely going to be a 50 to 100x in the next bull market. So I'm just accumulating it for free, literally. So now let me give you an update on my yield farm. So ETH Radix still getting 42% APR paid out in ETH and Radix. Gala and ETH is out of range right now, but when it goes back in, it's getting 35. This is just stable coin that I have sitting on the sidelines. 82% here, 64% here. Now, you remember last time I showed you this, I had a lot of ETH and USDC farm. So I was providing liquidity in the range of pretty much 1250 and 1350, and as you can see, it went out of range to the upside. When it goes out of range to the upside, it buys the losing asset, which in this case is USDC. So I got my profits and I got all USDC, so I got out of it. And if it goes to the downside, I'm going to be in 100% ETH. So I told you I'm short in ETH, so I sold all the ETH, got out of the position, and when it goes back down, I'm going to get back in so I can keep making passive income in Ethereum and USDC. And I even got out of the pool where I was providing liquidity from 1,000 to 2,000, as well as I went out of range from my range of 1,400 to 1,000. So I sold all that ETH, and I just have it sitting on the sidelines in a stablecoin farm, making like 3 to 5% APR, no big deal. But once things drop, I'll be able to buy more, yield farm more. And then the cool thing is, once it gets to the bottom, that is the safest time to use leverage. Like right now, exchanges are like casinos, and people are taking out leverage longs, meaning they're taking out leverage to bet that the bull market is back on because these traders are naive. And the casino sees that. They can see all the long and short positions, and they make money off fees, so they can manipulate the price. So given that it's more longs than shorts, normally when that happens, it's usually the opposite of what the herd is doing, right? So once these traders get liquidated and things bottom out, and then, the excitement from crypto is gone and people think it's over, that's when I'm going to lever up at the bottom. I'm going to get out of my shorts with profit, lever up at the bottom, buy Bitcoin and ETH, and just ride that thing up to the top, okay? This past bear market was mainly contributed to by companies like MicroStrategies, Tesla. Those are the two main corporations, and then family offices and hedge funds. The next bull market, we're going to see Goldman Sachs, BNY Mellon, Fidelity. They just started trading crypto. NASDAQ, all Citadel, like the market makers that provide liquidity in traditional finance, are going to be a part of this next bull market. And it's going to send crypto to extremely high highs. But that may take a year or more, right? Like they have to tame inflation, get all this funny money out of the economy. The Bitcoin halving is out for another 2 years, so there isn't anything in the short term that's making me bullish on crypto, which is why I'm shorting. Like I said, you want to buy the dips and sell the tips in a bear market. You want to buy the dips and sell the tips in a bull market, but in a bear market, you want to buy the tips and sell the dips. Okay, and that's exactly what we're doing in a very, very low risk way. You can still make money in any kind of market. In a bear market, it's just a little harder, so you kind of got to move different, know what you're doing. So with that, I encourage you to like, comment, subscribe as we are trying to get this message out to as many people as we can. Share it with a friend. Let me know your feedback. But I love all of you. I thank you so much for tuning in, and I'll see you in the next video. Whew.